Good day. It's Thursday, September the 13th. I'm Martin Gago with Market Radius Research. Today we've got on the call Paul Antoniadis. I hope I got that right.
That's perfect.
All right. Of Good Natured Products. Good Natured Products manufactures and develops bioplastics and compostable packaging products. I've got Good Natured Product on the call for a few reasons. Again, they are in the green tech space, and I have a strong affinity towards that as they are focused on making packaging materials more sustainable. And as well, I met Paul several years ago when it was just getting going. I was really impressed by him, but was a little skeptical on this little company could pull off growth that's dominated by so many larger players. He's clearly shown that he can, and I'm excited to see now how he got here and what's up next. Remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Paul, thank you for joining us today, and let's hear your story.
Oh, well, thanks for the introduction. It's great to see you again. Hello, everyone. It's a real pleasure to have this opportunity to share with you Good Natured's strategy, business model, most recent financial performance. At Good Natured, we create a North Star to ensure that our owners, our board members, and our operating teams are fully aligned on how we're deploying our owners' capital, what type of company we're building with the capital our owners are deploying to Good Natured, and how we're creating value for our owners. And our North Star at Good Natured is to become North America's leading earth-friendly product company. And we're going to achieve that by creating the largest assortment of plant-based products that consumers like yourself or business owners and operators can use as an alternative to the fossil fuels or synthetic chemical products that you're using every day throughout your home, or you're using every day to run your businesses. And the way we're going to create this large assortment or one-stop shop for all your plant-based needs is by executing our growth strategy. And our growth strategy is a two-prong approach. There's organic initiatives, which we want to account for 50% of our growth, and there's our acquisition initiatives, which are going to account for 50% of our growth. And the way we execute those two in conjunction with one another that builds this leading collection of plant-based products is the following way. We have a growth team. They do all the research of all the categories we want to extract value from. We look at all the companies, plant-based companies, petroleum companies, their products, their features, the product's features, their benefits, their pricing, et cetera. And we make one or two decisions. We say, hey, let's deploy an organic initiative and design, build, manufacture, and launch the product directly into that market. Or we make a decision to acquire a company in that category. Could be a plant-based company or a petroleum company that either strengthens our position in that category or opens up that category value pool to our company. Now, if it's a petroleum-based company, what we do is once we acquire it, we convert the customers and their products to our plant-based materials. Now, the consistency profile, or the three things that are consistent, whether they're plant-based company that we acquire or petroleum-based, is they have to have lots of customers, they have to have lots of products, and they have to be EBITDA positive. Now, when we assemble this leading range of plant-based products, we're addressing an unmet need in the market, which is consumers and business owners and operators. They're looking for a supplier to make it easy and affordable for them to start transitioning to away from petroleum products. And we're attacking that position in the market. We want to make it easy and affordable for consumers and businesses to make the switch. Now, I'm going to set some context by providing some corporate highlights before I get into the heart of the presentation. And, where are we with executing this North Star? Well, we're off to I think a fantastic start. We have over 400 plant-based products across 5 different business groups. We have over 800 recurring B2B customers, and that's growing by the day. And we're also a retailer. We sell our consumer products direct to online through our own e-com sites at goodnaturedproducts.com or third-party sites like Amazon. And we have over 9 manufacturing locations, of which half of them are outsourced and half of them are insourced, which means we own those facilities. So we operate 150,000 square feet of manufacturing facility across Canada, and the US. Simply put, we make better everyday products with the highest level of renewable materials. We kick out all that nasty stuff or as much petroleum as we can out of our products. And again, we drive that, making it easy and affordable. As mentioned in the introduction, we're a growth company focused in the ESG space or environmental benefit space or human health. And if you look at our last 2 quarters, our growth is at an incredible performance. Like we did 237% growth in Q2, well above our 6-year CAGR. I think it's also an important consideration is the team's executing the strategy. So whether it's our acquisition strategy, which we've acquired 3 companies in the last 16, 17 months, or if you look at our organic initiatives, such as launching our plant-based freezer bags, sandwich bags, and trash bags, the team is executing it. And I think the final point that I'll highlight here is we're disrupting huge markets here. Like if you look at packaging as a bit, one of our business groups, just globally, it's over $1 trillion. If you look at petroleum products, it's a massive, hundreds and hundreds of billions of dollars. So we're not out there trying to carve out a new market. We're out there to offer you just a choice. Just, consumers love choice, and we think we have a choice that's better for human health and the environment. Now, I'm just going to skip some of the milestones and kind of jump into what is really driving the marketplace. What are the macro trends? What are the like you said, strong tailwinds? And I think I'm just going to highlight a few. One is the sustainable product sales in the retail. If you look at the FMCG goods in the sustainable product segment, it's one of the fastest growing segments, both online and in physical stores. And so consumers like yourself are saying, hey, retailers, I want a choice. Like I want a more sustainable product option when I go shopping. And it's clearly growing quite rapidly. So the way we position Good Natured for our owners to take advantage of that macro trend is we make plant-based sandwich bags, plant-based trash cans, plant-based trash bags. And we provide retailers, both e-com retailers and physical retailers, a range of products that they can assort to capitalize on this consumer trend. Now, what's interesting, there's because these products are growing really fast, a lot of them are still using petroleum packaging. And as an example, like tech growers, which is one of our key segments we focus on as a food producer, they're really growing quite rapidly, and they're locally sourced and made, and they were using petroleum packaging. So it was just natural for them to extend their efforts of their sustainable products into the packaging. And I can give you example over example, and that's part of the transformation that's taken place, is this consumer driving growth in sustainable products. But the consumer is also saying, hey, retailers, hey, food producers, food growers, you've got to make an effort to utilize packaging that is healthier for us as humans, but also better for the environment. And Good Natured is leading that charge, or providing the largest range of products, both stock, whether it's stock packaging or whether it's custom packaging. We can give those options to our customers. And I think that kind of lands into the last point, is these consumers are also voters, and they're voting in, whether it's at municipality level or whether it's at state, provincial level, or federal level. They're indicating they're voting in officials that are more proactive in policies that are better for human health and the environment. Now, I talk a little bit about our go-to-market, and my marketing team calls these proposition elements. I like to call them fishing lures. And these are the 3 lures that consumers get really excited about our customers, and they all work together. One doesn't really land the customer. And the first one is the ingredients. Like, they're really excited about plant-based materials. We have the widest assortment of plant-based materials to choose from, both for stock product and custom products. But you can have the safest materials that have a lower gate-to-gate carbon footprint or free of any chemicals of concern. If if the design isn't equal to or better than the petroleum product that we're looking to displace or replace for our customers, they're not going to switch, and I wouldn't expect them to switch. And so when we say better or equal to than petroleum product, we're not just talking about the physical characteristics of it, although that's important. We're also talking about providing products that help enhance their business performance. So if I can go to a retailer and say, hey, guess what? You can assort these range of plant-based products that you're currently not carrying, that can help drive their revenue. Or if I can design a pack. Yep.
Oh, do you mean when you're designing like sandwich containers? I am just making something up for the grocery store, or for the deli, or that you're just trying to design a better package so they go, oh wait, you're like, not to be hyperbolic here, but you're like, ooh, the Apple of like sandwich cart designs. You've just done it a little bit better, and that sort of helps get them over
Absolutely.
the goal line.
I personally feel that's what gets them over the goal line, because you know, whether you're a small business customer or a regional enterprise customer or a large national, you're in a business. Whether you own it, you got to make your payroll. If you're part of a large corporation, you have to hit your targets to get your bonus. And what we want to do is provide innovation and design that basically enhances their business performance. I'll give you a couple examples which you kind of teed up, where we were working with this customer. It was a regional grocer. They baked a bunch of cookies. They were using a import package that was causing a lot of cookies being damaged. And I don't know about you, but when I'm going to go buy some cookies from the grocery store, I sure the hell don't want it to be broken, right? I want to be the one that's mowing down those cookies. And so what happens is we look for that. I'm the worst, right? I look for those cookies, containers that have zero broke. Well, for a retailer, those become markdowns, or those become throwaways, or those become issues. And if there's a lot of broken cookies in the packages that are on the shelf, your sales go down. So what we did is we designed a package and it was a mid-enclosure, so it was also not very visual. So we designed a package that basically eliminated the damages to the product, which reduced their markdown. We created a package that better visualized the cookies and made it more stackable, so they could put more of them out on the shelf in the same exact space. And that drove their growth in that category and reduced their markdown. So for them, that was the big closer. And oh, by the way, it's made from plant-based materials that are healthier for humans and the environment. So the design aspect is really important. We have material engineers in that space. We have packaging engineers. We make molds. We design them and make them. So it's a big closer for us. And that's our approach, because you can have the safest materials and the greatest designs, but we got to make it easy for them to switch, and easy for them and make them affordable for them, where price doesn't impede them from making the change. And sometimes that easy button gets pushed by what I just pointed out. Sometimes that easy button gets pushed because, hey, we could start with the cookie category, but guess what? We can do deli. We can do produce. We can do ready-made meals. We can sell you trash liner bags that you can assort on your shelves. We can sort zipper bags. So we become this one-stop shop and a trusted supplier that can introduce these alternatives. And retailers love that. Food producers love that. You become their trusted advisor.
Paul, I'm guessing that it sort of surprises me and doesn't surprise me that people weren't coming up with better containers. Am I right to guess that retailers and CPG good companies, they really kind of viewed the packaging as just an expense, and they were really like, okay, let's just find the cheapest one. Maybe it doesn't solve all the problems, but it's only 1 cent a piece. And that was a supplier mindset. And you're just bringing in a slightly different mindset where like, hey, how can we use this to solve problems or create opportunities? Is that kind of how the market dynamic was and how you're kind of shifting it?
Well, when you look at our customer segments from small business, regional, and national, what you're pointing out varies between those segments. Like some national players are very, very proactive in this space, and we're providing an option for them in plant-based and enhancing their designs, and others aren't. And if you look at the regional enterprise, they're trying to compete, right? They're trying to break through. They're trying to optimize and stand out on the shelf. So when you and I walk in there, we're like, oh my God, because you eat with your eyes first, right? So if we can better visualize the product, they're going to buy them. So the short answer is yeah, it does vary within there. Like the small food producers, for example, they're buying from a packaging distributor. They don't, whatever the packaging distributor has are your choices. And what we're saying is, hey, we've got choices, stock choices. You don't like them, we can make it for you. We can design it for you. So, I think, for us, our sweet spot is that regional enterprise, although we do business with large national accounts. It does vary across the segments, and design has a big impact to the environment too. Like I mentioned that cookie category, not to bring that one back up, but that had a lot of airspace in their packaging. So they were wasting a lot of material for nothing. And that's what caused the cookies to shift when people were picking them or the team member was putting it on the shelf. So we actually not only converted it over to plant-based material with a better design, but we actually used less material, which enhanced our ability to put more on the shelf. So it does vary. Some do it really well and some do it really poor. And what we want to do is be viewed as that innovative company, not just on the plant-based materials, but also on the designs. And here, you can see like our choice for our customer starts with our materials. And we have fiber products, we have bioplastic product materials, we have biodegradable materials. The bioplastic materials, for example, are identical to a fossil fuel from a chemistry perspective. So downstream, you can co-mingle them. There's zero contamination. Like you hear some things like, oh, plant-based materials contaminate downstream and can't be recycled. And that's just, that's just not true. Our bio-PET, bio-HDP, they can 100% co-mingle in downstream with no contamination. Now the biodegradables, which are fully compostable in an industrial composter, cannot co-mingle with petroleum. They're still fully recyclable. They can be chemically recycled and they can be composted. Matter of fact, we use up to about 50% recycled material for biodegradables. So we start our choice with these material options. So if you were a customer, I would ask you questions to understand your needs, your business objectives, your environmental objectives. Some of our customers are switching because it's important to represent this change to their team members as a retention strategy. So there's lots of different things that we explore through good qualifying questions. And we say, maybe downstream co-mingling is important to you. Let's go with bio-PET. If industrial compostable is more important to you, we have biodegradable. So we offer that choice, and that's it's been thus far a smashing success and being really well received in the market. And I'm just going to now shift to our business model, which kind of ties into the easy side and affordability side that we're offering in the market. So our business model is a retail model. It's very much like any other great retailer, successful retailer, where they create a product mix and a customer mix to deliver consistent growth and margin. And being a retailer, that's how we've designed Good Natured. And it starts with our product assortment. So you can see here we have 5 business groups. Packaging includes food packaging, food services, medical packaging, industrial general merchandise packaging, stock and custom, as I mentioned. And you can see these leaves represent where we're extracting value across this customer group, which is running vertically here, with our B2B customers being national. These national accounts are the big guys. Everyone's competing for them. They're lower margins. Regional is kind of our sweet spot. Margins are within our historical range. And then our small businesses, there's, millions of these customers, which are rebounding fantastically from COVID here as of late. And then we have our direct to consumer, which is our general merchandise product. So we sell these products both to physical retailers and also through our e-com stores. These include, as I mentioned, trash liners, zipper bags, food storage, trash bins, recycle bins, anything in your kitchen. And then commercial business supplies is basically pallet stretch wrap, which if your viewers, it's basically that pallet stretch wrap that wraps around the boxes. We sell that to cross-sell that to a lot of our customers. And then our industrial segment is this right here. And so this is, I get a lot of questions in this, so I'm just going to speak to this a bit. This industrial segment is we create truckloads and truckloads of this rigid roll stock that we commercially sell to over 200 thermoformers across the US and Canada, and they stamp out their own packaging. And we also use this roll stock to produce our own packaging at our own facilities or our outsourced facilities. And so we, it's a big component of our business. We've made 2 acquisitions inside that space to really strengthen our industrial roll stock position in the market. We're one of the largest industrial roll stock producers in US and Canada. And then we have some services that underpin that. Now, I'm taking the time to share this model because this is what you're investing in outside of the people who are leading the company. And each one of these business groups and departments have different margins, and each one of these customers groups have different margins. And what we do is we look at our customers' revenues and service on a weekly basis to help deliver a margin mix that allows us to compete with petroleum pricing across our group. So we're very in other words, we're very competitive on the right products, and then we're also able to extract the proper value out of our wider range of products.
Paul, could you scroll back to that? I'd like to dig a little bit deeper into the whole supply chain of where everything comes from. So let's start at the end. There packages, a sandwich or a cookie pack that you've got that could have been manufactured or stamped, because it's like you have those sheets that you were pointing to, and you've got a mold system where you kind of stamp a mold into it, stretch it out so it's the proper shape, and then you can clam it shut and so forth. So you guys design that, and that comes off the feedstock. You will, in essence, sell yourself the feedstock, or even sell it to your competitors who will make a competing sandwich, clamshell, or whatever out of that. But you're getting sales at least on selling that feedstock to them, correct?
That is correct. So we'll kind of talk about how this fits under ease and affordability. So if you're a customer and we start talking to you and you're like, hey, particularly a national account, hey, I've been working with Martin's thermoforming for 20 years. We really want to make...
Sorry, a thermoformer is like a stamper, like in an auto for like where you stamp out the shells.
That's exactly right. And, they say, hey, I've been working with Martin for 20 years. We really don't want to switch, but we really like to move into plant-based materials. And they've had a challenge, getting access to materials for whatever reason. And when we would like for you to work with us. And we say, well, listen, we're happy to work with Martin Thermoforming. We'll sell you the industrial roll stock because we make great roll stock at a very affordable price, and it'll be easy for you to make the switch. So you don't have to walk away from that customer. Like, we have a lot of great customers in the thermoforming space. And sometimes people think, well, aren't they their competitors? We're like, this is like a huge market. Like, no, like we give them that option, and we want them to take as much industrial plant-based roll stock, stamp out as much product as they can. Because we're collectively making the switch in the market from petroleum. And for that customer, they're like, hey, this is great. I can stay with Martin Packaging, and I'm really thermoforming, and I'm really happy. Now, when you sell to your feedstock to them, is it basically, okay, we're going to take out the petroleum based and just slide in and maybe we have to adjust a few knobs, but we don't need to get new molds or new anything. It's a pretty simple transition from one feedstock to the other. It's a drop in. So in this customer example, what we do is we're agnostic to plant-based materials, inputs, resins. Like, we work with some of the best partners around the world, most innovative groups, small and large, and we procure that. And we bring it to our facilities, whether it's IPF or X-Tech facility. That's our in-source facility that we own. And what we do is we mix those resins, and we produce this roll stock at the bottom right here that your viewers and listeners can see. And then what we do is we ship that out to Martin Thermoforming, and then they stamp out their packaging. And then when they create industrial production waste, we buy back that waste to close loop, make sure we minimize any waste, and we maximize all the potential recyclability of materials through our manufacturing. And that way, that customer in that instance doesn't have to switch away from Martin Thermoforming. And we have 200 of them. Like, we want them to grow their business. Like, we're working with our Thermoform customers to grow their business. Now, in another instance, let's just say you're a food producer, same food producer, and you want to make the switch. And you're like, yeah, I'm open for Good Nature to make the packaging. We're launching these 5 new SKUs, and they're we'll just call it the brand new organic line of cookies. And we don't have a package, and we want to work with you on the design. So then we sit down with them and we say, okay, well, tell us about the customers are selling to. How are you displaying it? Is your packing automated? Is it by hand? Is your labeling automated? We get all that technical and market information from the customer, and then we design a package at our facility. We give them samples. They test it. They say, yep, love the design. Testing, which means the packing and labeling process works. We then go out, procure the resin, ship it to Extec or IPF. They create the sheet. They send that to our thermoform facilities. We stamp out the package and we ship it to the customer. Now, that same customer may buy pallet stretch wrap, because as they use the package and put the cookies in it, put it in a box, put it on a pallet, they need pallet stretch wrap, right? So, and they pallet stretch wrap it. In the first example, Martin Thermoforming, same thing. We may cross-sell the plant-based pallet stretch wrap to them, because as they stamp out the package and put it in a box to send it to the cookie company, they got a pallet stretch wrap it. So a lot of these categories are designed to be cross-sold, because our model is not designed around one customer, one product. Our organic growth model is designed to pull 3 levers. Get a new customer across this group. Once you land them, cross-sell additional SKUs to them to grow our share of wallet of their sustainable spend. We want to have the largest market share. And the third lever we pull on the organic side is launch new products. Products that customers have indicated to us that they want to switch at, products that we feel we need to design and take to market. And then our acquisition is our fourth lever we pull. So our model is very dynamic, and it really, really stood out. If I can just show, I'm just going to skip a couple slides to show how the model works. If you look at this margin mix model, it's designed to protect on the downside while giving us upside potential because of these different levers, because of the wide assortment of customers, because of the wide assortment of products, right? And if you look at Q2, which is this pink bars from last year, which was all economies collapsed during 2020 in Q2. I think it was like 30% in the US and maybe more in Canada. It was just terrible. Well, our small business customers and hospitality customers and event customers completely got decapitated. It was miserable for them. And at the same time, our medical packaging exploded. We were doing COVID-19 testing kit packaging. Our food producer, food grower packaging exploded because we were cooking more at home. So any packaging associated with, supermarkets took off. Our e-com took off, and we actually grew just under 60% that quarter. And you can see that momentum, that trend line continued during one of the greatest, most challenging economic pandemic situation. I'm not saying we're out of it, but it was just really our model stood on its head. It delivered, the team delivered, and it should give your listeners and your viewers great confidence. And then we made some strategic acquisitions both in Q2 of last year, Q4, and then in May. And you can see we're starting to have that same revenue momentum by executing both our acquisition and organic model. And I think that's the dynamic behind our business is our growth strategy has these multiple levers.
And just going back to trying to understand your whole supply chain, you buy the resins, and they're typically, I believe, in little pellets or beads or something like that. And then you buy those from third parties and get a mix of them or so forth. Or do you do any resin production yourself with your own chemical processes?
We do not refine the resin. Like, we do not make the resin. Now, we buy that pellet from some great companies. We're agnostic, and there's tremendous innovation occurring around the world way upstream with plant-based materials. Now, however, I want to point out that sometimes in an application like our high heat takeout containers, which are fully compostable, we could not find a supplier that has that resin. So what we did is, our material science team, they created a recipe utilizing different plant-based inputs to create a composite IP, or a composite, I use the recipe. It's like cooking. Our CTO would probably roll his eyes if, by the way, I'm describing this, but we created our own proprietary recipe now that created a material that is dishwasher safe, fully microwavable. And we've taken that material, which is trade secreted to us, and we're stamping out takeout containers, and we have a whole processing trade secret around there that allows us to process that material, what we call cycle times, through our machines at a very fast rate. That is something we do. So no, we didn't make those ingredients that fit in that recipe, but we did combine them into a mixture. So
and then, sorry, you buy those, and then you roll them out into the sheets, which then get later stamped, or you just,
correct,
with your like your paper tray holders or your trash cans that you make out of bioplastics, and that those you take the resin, melt it down, and then stamp out or mold out.
That's those, exactly right.
Pieces. Okay.
That's right. At that extrusion facility, try to create this visualization. If you can imagine, these ingredients are in boxes, right? We vacuum them up in a recipe, and then we melt them, and then we extrude the sheet. That's kind of a very simplistic visualization. So we do not make the resins. We're agnostic to that.
And I guess some people could say, well, you don't have some of that core IP, but conversely, you can pick and choose. If someone comes out with an awesome new resin or something, you can then just take what you want and create your own recipes out of that to say, hey, we've sort of baked banana, or I don't overstep the recipe analogy, but then you create your own recipes for certain characteristics for the end packaging.
Yeah, that is correct. And the balance behind that view is we do have some material composite IP, but you're absolutely right. We are not the ones that are making that resin. That gives us a lot of flexibility as innovation comes. We provide all those innovative materials a channel to take their material to market because of our reach of customers, because of our diversity of application. And so we embrace that innovation. Now, at the same token, if you look at the petroleum industry, there are companies that are like billions and billions and billions of dollars of revenue. They don't make the resin. So you don't need to be the resin maker to create a large company. Matter of fact, we think there's more value the closer we are to the customer, and we just build that go-to-market channel for the resins. And so far, it's worked really well. It's working really, really well.
So would it be fair to guess that in your M&A strategy, buying a resin company is not high on the list of priorities?
I would say that is correct. Like, I think right now, if you look at our acquisitions recently in the industrial segment, so we've acquired the last two customers. Sorry for making you dizzy there, but we bought the last two companies in the industrial segment. So what we want to do is really position ourselves to grow our packaging. We're really focused on packaging, general merchandise, commercial supplies and services. Like, if they're, I think we're kind of tucked away any acquisitions in industrial, or really concentrating on the other business groups, or maybe we'll open up another business group. So I think that's where our next acquisitions will be. It'll be outside the industrial segment.
All right. Okay. I think I got a good understanding of how the whole supply and value added chain works through there. That's great.
Yeah, and I want to now talk a little bit about our customers. Like, I think it's really important to note, to tie back these tailwinds or market drivers. Like, our brand is being exceptionally received across all of our channels. It's actually really humbling to see the positive feedback that we're receiving, whether it's on Amazon or whether it's in our social feeds or whether it's just a letter coming to me or an email coming to me. It's really, really, really impressive. And I think it's really important that to build a very large company, it starts with one customer experience at a time. And no customer is going to switch 100% of their products to plant-based, right? They may start with, of the 800, they may start with 3 products, 5 products of their 20 that they could switch, or 100 that they can switch, or thousands that they can switch. So, our customer-centric approach in retaining these customers and cross-selling more products to them is fundamental to our strategy, right? So that's what builds great companies, is giving them great service around a great series of products. And this whole focus on easy and affordability is winning our customers over. I mean, just in Q2, we brought on 200 new customers, 100 of them from the X-Tech acquisition and 100 of them from our organic initiatives. So, and that's all public domain information. And it's important to note that customers are voting with their wallets that they want a better choice. And I think we touched on the operations, quite a bit with your question. This kind of had this visual up earlier. We focus on a 60% outsource and 40% insource, which means we own the facilities. And I think it's important for your viewers and listeners here is that, even though we own and operate 150,000 square feet, we have some great outsource partners that give us the ability to capture more market share. They're committed. Some of them are shareholders and owners of Good Natured, and they're committed to expanding their capacity and supporting our growth. So if we land a large customer, we can spill them into a combination of our in-source, outsource models. So I think it's really important to note that, that this outsource model is a key component of enabling our ability to continue our growth rate.
Paul, just going back to that in the supply chain, you essentially have 3 types of manufacturing facilities. One where you make just the sheets of it, another one where you do the thermoforming, and then the other one where it's more of the molding, injection molding. Are those
Correct.
Basically the 3 types of facilities that you run?
That is correct. So I would say the ones that we own are the packaging that stamps out the packaging, and 2 that create the sheet. Our outsource partners do all of it. So okay. The molding, the printing, the stamping. We even have some roll stock partners in the industrial side. So, that outsourcing model is really important as a growth company because, if we land a large customer, we don't have that concern around capacity restraint, right? We're also investing within our facilities around robotics and high-speed equipment, like in IPF, for example. We're beginning of the year. Q1 will have increased our capacity there by 50%. So, we're really confident, particularly within the supply chain disruption that's occurring right now with this inflationary pressure. We're actually, set to really capitalize on that, despite the challenges that it's created for all of us, and that's due to the in-source outsource model.
I see all your manufacturing facilities seem to be right along the Canadian-US border there. Your strategy for locations, is it important that they're close to the customer, or is shipping a big thing? And should we expect more little hearts to appear further south, or what is that just sort of random where they happen to be?
No, it's not random. Like, we try to optimize our routes around our movement of our raw materials, and this really is the starting point of the footprint. I think if you overlay our distribution centers, you would see our distribution is pretty much across all of the U.S. Our warehousing distribution covers pretty much a good chunk of all sections of the U.S. Now, I would say in the future, will that extend? Possibly. Like, I think, as we grow out our footprint, it'll open up those opportunities in the future for consideration. So, but in the sequencing of our strategy, we purposely have done this.
All right. And I'm curious, with your competitors, do you compete with, let's say, a lot of offshore manufacturers who produce it really cheap and ship it over, and then maybe you benefited from supply chain disruptions? Or most of your thermoformers, let's say the last step in the supply chain, are those mostly North American manufacturers, your thermoformer competitors, partners? I guess it could be both.
It really depends on the geography. Like, if you look at the West Coast of the US and Canada, like, they have much clearer access to the Asian markets, right, than, let's say, the East Coast. So we do see some imports, even in the food packaging space, coming out of Asia. And what we've experienced through the ocean freight issues that are been well publicized in the media, container shortages, steamship shortages, that's opened up some really interesting opportunities for us, because on the finished goods side, people are getting shorted and they're looking for domestic options. And we anticipated, to the best of our ability, that this V recovery was going to be pretty intense. And even though we front loaded a lot of our resin, I look back now and I said I probably should have done a bit more, because I was nervous about the amount we brought in, to be candid with you, and now I regret not bringing more. So there's definitely some disruption and shortages on the finished goods side. Now we're benefiting from that, but we're also being impacted by these inflationary, so no one is dodging the inflationary cost increase that are taking place. That is pretty widespread and pretty well documented in the market. So we're positioning our growth first. And so if I get asked sometimes, well, how are you positioning Good Natured in this inflationary, supply chain challenging environment? Number one is, we need to service our customers to the best of our ability without any disruption. And we did that by front loading and being proactive with our inventories. What we didn't anticipate is the level of shortages that are taking place. Like, there have been some people who have approached us where their packaging was their POs were canceled because their people in the market are prioritizing customers. And that's opened up opportunity for us, more opportunity than I anticipated. And so, we're doing our best to, grab as many new customers and prioritize growth. So service our current customers, take advantage of the opportunities this is creating. And then all of this cost increases, we're taking steps to pass those costs on, provide visibility to our customers, communicate, as these costs continue to rise. And the market's kind of in this situation together. And but for us, it's all about, let's grab as many customers as we can, service them like crazy, and pass these costs on to our customers in a proper, timely manner. So,
are you able to pass those? Like, it sounds like you bought a bunch of resin maybe at cheaper prices before supply chain disruptions came up. And do you, like, your pricing, do you sort of sell on long-term pricing contracts? Like, yeah, for the next year, the next million packages, we'll give you so much per package. And are you, like, properly hedged on that? Or are you able to pass on all the cost increases onto your clients?
Well, the costs have been moving so fast, it's been very challenging in the market just in general to get our pricing fairly and properly out to our customers. But yeah, we're doing it. We don't think this inflationary environment is going to go away. A lot of it is driven through the logistics supply chain side of things. And, but our supply chain line, so as we grab this new business in the market, we've got a pretty good shored up supply chain line, which, even though that material cost could be more, we're prioritizing having the material to service our customers, right? You can't tell a food producer can't say, well, I don't have any packaging to put my food in, right? They need to have packaging. And we're prioritizing that for them. We're prioritizing minimizing and preventing disruption to all of our customers. And if that means that the material cost is higher, then, we're going to do it. And we've got the supply chain network to, knock on wood. The team's working really hard to minimize these disruptions across our customer base. And hopefully we believe we're going to grab some new customers in this environment because of our supply chain execution.
All right. Okay. That makes a lot of sense. Thanks.
And then maybe we'll just touch on just a couple of the, I get asked a lot about what are your competitive advantages and your defensible moats. I think the very first thing is our first to market in a model centered around this product authority retail model, one-stop shop for all your plant-based needs, which is unlocking pricing mechanisms to make our products affordable, is really the biggest moat of defense. And we are going to continue to build our position in the market. So today we have 400 plant-based products. Maybe if you look at historically, 4 years ago we had 100. So we're going to continue to grow our range of plant-based products that our existing customers can utilize, and also potentially open up a whole new group of net new customers. Second is our sourcing agreements, our supply chain strategy, as we highlighted in this supply chain disruption environment, is we do some very clever things in that to shore up our accessibility to materials, and I believe we're benefiting from that in this environment. We do have some patents around materials and some trade secrets around processing and materials. And lastly, our brand continues to gain momentum and traction, and I think we're one of the most visited sites in the sustainable packaging space. So, again, these are auxiliary modes, but our primary mode is this product authority position. We kind of already touched on our growth strategy, half of our growth coming from organic, half of our growth coming from acquisitions. We talked about the 3 levers that we pull: land new customers, sell our customers more products, and then launch new products. So multiple levers that we pull, which helps us and our owners on the drive upside growth and minimize downside risk.
Paul, can you sort of go back to your M&A or the prior slide there? With when you make acquisitions, do you have sort of an ideal or sort of cash stock kind of ratio, or what's your sort of favorite way to kind of structure a deal? Do you want to keep management on and incentivize them, like with an earn-out or something? How do you ideally structure that?
Well, from the people perspective, we've been very fortunate in all of our acquisitions to keep the current leadership team in place, and frankly some of the family members and founders, and that's a big difference. Like we are as owners very fortunate to have the Meekar family, the Shepherd family, and the leadership team at Exec in place, because they've run those businesses for decades. In the case of, I tell Mark and Todd Shepherd that they were basically born inside their facility with, because their father ran it since the 80s. So they've been through the ups and downs and challenges of markets, and they've demonstrated their persistency, their grit through change. And we want to embrace that at Good Nature. We're a growth company that's with very high ambitions, and we need that experience on our team. Our structures, it's kind of industry standard, right? There's lots of benchmarking out in the market. I think right now converters in the petroleum industry are kind of, in that 7 to 13 times EBITDA. Lots of benchmarking for us to reference. We pay a multiple of EBITDA. There is a working capital adjustment consideration that can lower that multiple depending on the close of the working capital after 100 days or so of post-closing reconciliation. But our terms are like cash off the balance sheet, or we'll do some debt. We've done some VTBs, vendor takebacks. And the instance for X-Tech back in, I think it was February, we raised $23 million. I think the market anticipated something was brewing. And 3 months later, we acquired X-Tech. We used half of that raise to, the cash proceeds from that raise, to contribute to closing that acquisition of X-Tech. So it's a combination. We do issue some shares, but some of the companies we've acquired are multi-generational. So some of the owners, such as Barry at Shepherd's, they're retired. They really don't want any share position. In the case with X-Tech, the family already owned 7 million shares because they were an outsourced partner of ours, and we've been doing business through outsourcing for a long time, and they didn't, they've done very well with those 7 million, roughly 7 million shares, so they didn't want any more shares. So it depends on the deal size, but that's typically the levers. I will highlight on the tuck-ins, which are smaller plant-based companies, which we haven't done any. But there's a lot out there, and we're getting approached by, in a lot of cases, pretty regularly, I should say. Those will be, if we do those, or any, there'll be an earn-out, mostly shares, it's the issuance, because they're, $1 million to $2 million in revenue, and I can see all those being some type of earn-out structure with shares. So if we do anything in that space, we'll aim to structure it in that kind of share nature for these tuck-ins.
You mentioned earlier that I don't know if you have or you could buy petroleum-based thermoformers, where essentially you're buying their customer base, maybe their manufacturing facility, and then you transition their petroleum-based clients over to your better, greater value type plant-based plastics and compostables and so forth. Is that you're essentially buying their distribution and their relationships?
Well, maybe we can use Shepherd's as a real example. I mean, we bought more than just, first of all, Shepherd's is out for folks. They're located just outside Toronto, Canada, near the airport there. So it was really, we bought the building and the land along with, the equipment. So it's more than just, yes, it strengthened our customer base in Eastern Canada and the US, and without a doubt. And yes, our goal is to convert these customers in roughly an 18-month period now. But we got a lot more. We got some great people, tons of expertise. We got capability out of that. We're, with mold making, we picked up, manufacturing, engineers. So from the people, manufacturing capability, experience, know-how, customer base, capacity, geographic benefit, there's more than just a book of business. It's much more broader than that.
And when you acquire someone, they've got engineers and expertise, and you're creating the culture and the system so that let's say if facility C is having a problem with doing something, that they can call on facility B and kind of work together to problem solve, or, hey, we solved this problem 6 months ago and let us help you out. There's good synergies around that.
There's tremendous synergies, like not only in the way you framed it up, but if you look at, for example, IPF, which we acquired in late December of 2020, they're about an hour away, and they create the sheet. And so now our Shepherd facility, our thermoforming facility, which we named after that family, they can get the roll stock an hour away, and and now they're not instead of buying roll stock that included a markup, they're buying at an intercompany cost, right? So that builds our affordability. It builds efficiency. It builds collaboration across these different capabilities. So, for us, we feel when you take those expertise post-acquisition of IPF, X-Tech, and Shepherd's, there's a lot of knowledge that we're gaining out of that. But it's really important too to note that we're plugging them into a model, right? We're plugging them into this model that we've been speaking about. Like every acquisition we make has to support our organic model. So, we're not out there acquiring companies for the sake of revenue. We're not going out there acquiring companies for the sake of a book of business. We're acquiring a company that strengthens our supply chain, really positions us well on affordability, opens up new markets that we can cross-sell existing products into, or take that market that we just acquired to get into and take those products and cross-sell them into other categories. I'll give you some examples. So let's just talk about X-Tech and IPF. They create that roll stock. Well, I can cross-sell that pallet stretch wrap now to their customer base and open up a whole new customer base to a completely new business group. Services. Those thermoformers, we can provide outsourced packaging services to them. So in other words, if you're a thermoformer and you're over capacity and you need to spill over capacity to produce packaging, just outsource it to us. We can also potentially, support them in, throughout other categories, right? So it all has to fit together. So we're very methodical in sequencing our acquisitions to strengthen our supply chain and open up cross-selling opportunities, right? And I think it's really, really important for your viewers and listeners to know that. And any acquisitions we go forward, whether it's, whether it opens up a new business group or fits into an existing business group, we look at how it underpins the organic growth model.
All right.
Okay, I think we're just about wrapping up here. So, I think I'll start with highlighting some financial performance. Again, you can go to, our website to pull all of our financial statements and management disclosures, but I'll just highlight our revenue and gross margin performance. So this kind of represents a annual year-over-year growth. And I think what's important to note here is this model, when executed, delivers this nice stair-step revenue growth. And it also delivers these consistencies in variable and gross margin rates. It's important for your viewers also to note that 16.7 million does not reflect the TTM revenues from our IPF acquisition or the TTM revenues of our recent X-Tech acquisition in May. When you take those and you add them to the 16.7 million, we're roughly doing, call it, $60 to $70 million on a TTM basis. So we're much more than this $16.7 million company. And you can see that in this quarterly chart that I highlighted earlier about how the model during the chaotic period at the start of COVID, how it performed. And with these acquisitions that I highlighted earlier, I mean, in Q2, we almost did what we did the entire last year. So our margins remain within our expected historical ranges. And, I think you can kind of imagine what Q3 and Q4 are going to look like based off of our performance in Q1 and in Q2. So we're very, very excited about our future.
Oh, sorry, going back to the quarterly side. So on your margins, they spiked in a good way last Q2. Was that some kind of COVID dynamic? And they've generally been like stronger for 2020. I think they averaged out at like 37% from that prior slide. Is that just coming from your growing economies of scale, or was there was some weird COVID dynamic that sort of gave you a blip up?
Yeah, I think this is where, like, if you and I walked into like a Whole Foods or a Loblaws or, your favorite grocery store, you'd see they have lots of products there. And retailers, that product mix changes by season, by month. It's also very promotional driven. Well, our model does the same thing. It flexes based off what's happening in the market, onboarding new customers. Did we onboard a lot of national customers? Did we onboard a lot of small business? Did we onboard a lot of direct to consumer? And in the instance in Q2, medical packaging, which is at a higher margin rate than say our food packaging, over-indexed. And so that made our margins spike up.
Gotcha.
And so I got a lot of owners called me. They were pretty excited. They're like, oh my God, 44%. Like, are you going to do that forever? And I'm like, no, don't get too excited. Like, that's just, you'll see the opposite take place, where in our model, you may see the margins, variable margins, the gross margins be on the low end, 28%, 30%. Well, that could be because we're mixing in higher level of a business group or mixing in more national accounts. And we do our best to communicate that in our press releases when we release our financials. We also do a reasonably good job in our MD&A, but it's all about product mix and customer mix that causes that variability in our margins. However, historically, you can see we've been pretty consistently in that kind of variable margin ranges of 31 to 37, and gross margin ranges between, call it 28 and 35. So it's been pretty consistent, and that's what the model is designed to do, is deliver a consistent rate quarter over quarter. But if you are an owner, you should anticipate that there will be some variances. So don't get too excited if it's really high, and don't get too concerned if it's on the low end of the range. It's all about the mix.
All right. Thanks for clarifying that.
And I think I'll talk about the people a bit. Just at our senior executive level, we've got great ambitions here at Good Nature to build a large company, and we've got a strong team that can do that. And obviously, starting with Kevin, who's our CFO, he runs all the accounting components of this, the back office and compliance, and Don, who he's got over 20 years in the public markets. Don heads up our strategic partnerships and all of our M&A strategy. He does a lot of our capital formation. Guy's transacted over $1 billion through his career. Michelle's our CTO. I'm sure if he watches this, he'll shake his head on my explanations of all the technical aspects, but he's been around for a long time, great friend, wicked smart. He's out there looking at all the suppliers around the world and ensuring that we have the latest and greatest partnerships on materials and design. And then Stephanie's our chief psychologist. She's our growth strategy officer. She's looking at all those value pools, watches our competitors, works on the branding, determines whether we should acquire or go organic. And I'm obviously play the role of, orchestrating the strategy and making sure that, I think as a CEO, I would share with your viewers that I'm more of an owner activist CEO. I drive ownership centric inside of our company. Like, we're here to create value. We take great responsibilities of being stewards of our owners' capital, and I want to make sure that what we communicate to our owners is being supported and tethered and governed and executed on, and we take great pride in that. And I think that's a big differentiator for a micro cap, small cap company, is we're very much centered on our growth company position, and we're very much centered on ensuring that our focus is delivering value for our owners.
All right, that's great. I'd like to add, if we're running a little long here, I'd like to have a quick discussion about, call it the regulatory environment. Are there mandates saying no more certain types of plastics? I believe the styrofoam, we chatted last time we had met several years ago, removing the styrofoam type packaging. And as well, I think in California, they're passing the sort of truth in advertising law regarding recycling, those old triangles with the numbers in there that people think are recyclable but may not be recyclable, or compostable stuff that's not really compostable. Like I'm threw a lot out there, but could you just sort of, what's the regulatory and sort of that, how is that environment changing?
Well, I mean, I think the voters, which are our consumers, are wanting our policymakers to support a step forward of improving, deploying policies that improve the positive impact to the environment and human health. And I don't see that going away. Like, I think regulatory policies are at the early stages of being deployed now. I always tell all my owners, we're not building a company around government policy here. We're building a great company centered on customer needs and making it easy and affordable. However, these municipality, state, federal policies definitely supports our tailwinds. And I think it's going to be interesting to see how it all unfolds across North America. But, you know, for us, it's been nothing but positive, right? So it doesn't hurt our business at all. And then, you know, if the policies aren't there, it's not going to hurt our business, right? You still got to create great products at great prices and deliver them on time. No policy is going to do that for a customer. But I will say that consumers are demanding this change, and at least they want to be given a choice. And if policy can help drive that choice, it's terrific. Sometimes on the recycling side, and this is more, you know, a personal view on this, like, I want to make it really clear that, you know, recycling and recovering from recycling are two different conversations. Like, the recycling system, all of our materials that we make products out of are recyclable. It just really depends on the downstream capability and the aftermarket value, right? So we use up to 50% recycled, post-manufactured recycled content in all of our materials. And we also use in some of our bioplastic lines some post-consumer recycled content. So, you know, I think really where I'd like to see policy improve on and investment from governments, although municipalities make the investment in downstream, I just like to see more innovation downstream, like chemical recycling, you know, optical recycling, incineration for energy, a wider range of industrial compost capability. I think Montana has done a great job on deploying industrial composting across that state as a great option. We don't want downstream. I'd like to see downstream make a greater level of investment. I believe material science is outpacing the downstream innovation, and I'd just like to see more of it.
And when you say downstream innovation, what do you mean by that?
It's all about waste management, right? So if you and I walked into, and maybe you have, I don't know if you've ever been in recycling facilities.
Yeah.
You know, it's crazy. Like, some of them they're just hand sorted, right? And they're really focused on bottles and milk jugs, and that's it. And then they take the rest and they create bales. And we've all read, you know, articles about those bales getting shipped to other countries, although a lot of that has been shut off now. Or in my building specifically, like when I take all my plastic containers down there, it's one stream, right? So whatever it is, you just dump it in one container. Well, how do you sort that, right? Like,
yeah,
you know, and there is really good technology where, if you put all the plastics, again, I'm not an expert on this, but in general statement is, you know, the optical sorters can actually separate by material type, and even in some cases by brand. There's not enough of that, right? Incineration downstream for energy is another big segment that's growing quite quickly around the world, where they're taking that product in a closed loop manner, incinerating for energy. So I think I'd like to see more of that innovation catch up with the material component of it. The material improvements and innovations that I'm seeing, I'm not seeing it happen downstream fast enough. Now, is that going to hurt our business? Well, not necessarily, right? I mean, packaging is not going to go away. Like, our supply chain requires packaging. It's like I look at, you remember landline phones, and now we have these freaking crazy, I don't know if you can see it, cell phones. I think packaging is going to go through a similar transformation as landlines did to mobile phones, and we're positioning Good Natured to be on the forefront of design and materials and applications and assortment. But I think there's going to be so much innovation that it's going to position, we're going to benefit by our first to market position. I don't know if that same sense of urgency is downstream in the recycling industry. I'd like to see more take place. It's just my personal view.
All right. We were almost like well over an hour here. I just any final comments, and just over the next 6 months or through the end of the year, so what kind of news flow should we be expecting? I would guess maybe some new M&A, maybe some big contract wins, or earnings results. Is that kind of news, or is there anything else people should be keeping their eyes open for?
No, I mean, well, first, let me say I really appreciate you taking the time to, introduce me to your viewers and listeners. It's a tremendous pleasure. It's great to see you. COVID's restricted a lot of this. So I would just tell all your viewers, like, listen, if you're looking for a growth company that is really trying to make a positive impact to the environment and human health, it's Good Natured. And our impact is centered around commerciality. There's a lot of people out there promising they have a silver bullet to solve all these environmental issues. And what Good Natured is doing is we're focused on creating products that people want to buy and use inside their businesses and homes. And the more we can sell, the bigger impact, positive impact we're having to the environment and the human health. So our focus on commerciality and putting the quiet good to the environment and human health is our secret to success. Like I tell all of our team, I have some team members, we have 175 people, and they're super passionate about the environment, or they're very health orientated and human health, and that's why they come to Good Natured and they're fired up. And I just tell them, listen, you want to make an impact to the environment? Design great products that are affordable for customers to buy. You want to impact human health? Get out there and service our customers in a way where they're not going to have any disruption during this chaotic supply chain time. And the more we sell, the more good we do. And I think that commerciality, I hear it from owners unsolicited, such as, it's refreshing to have a company so focused on customers. It's refreshing to invest in an environmentally focused company that's also commercially orientated. And that's reflective of our growth. That's reflected in our execution. That's reflected in our say-do ratio. Yeah, of course, we're going to make some mistakes, but we're going to be a B+ in what we say and what we do. And those are differentiations when you're sitting and assessing companies, comparing companies, that I would say, take that into consideration and watch us, because, the best way to predict the future is to look at prior behaviors. And I would say our prior behaviors really showcase a very bright future.
All right. Well, that's a great way to end it, Paul. Thank you very much. We appreciate you taking the time to chat with us. And maybe we can chat again in next year or so, and we see how things are continuing on. So
I would love that,
Paul.
Thank you.
All right. Cheers. Have a great day. Bye.